All right, everybody. Thank you for your patience with that. We're going to go ahead and get started now. Today, I'm welcomed by Greg Lewald from Falvey. My name is David King, shown here. We have our contact information loaded up on the screen. We'll show it again near the end, as well as everybody who's attending today will receive a copy of this webinar in the next couple days. Greg's team will get that sent out. So without further ado, we're going to go ahead and share my screen here. All right. And Greg, are you able to see my screen? I apologize, but I think I had it off earlier.
Yeah, I can see it now.
Okay, all right, sorry everybody. Yeah, so Greg Lewald here. Here's his information. This is my information down here, as well as support at Appulate if you need to reach us. Apologize for not sharing earlier. All right, I'm going to go ahead and turn it over to Greg. Greg's got a nice presentation for us today to go over.
Yeah, thank you everybody for joining. David, appreciate it. Just a note, you did have a typo on my name, but the email is correct. It's Liewald. Looking forward to this time with you all. I'll do my best to get through this content pretty quickly. I know your time is valuable. I know we have it noted as being APD, MTC, and builder's risk oriented, but I am going to extrapolate a little bit further around like what Falvey can do as a whole, who we are. In case you don't know who we are, I think it's important for me to kind of convey that. So let's get into this. David, you can switch slides if you would. Awesome. So Falvey is we've been around for 30 years. As of this year, we're celebrating our 30-year anniversary. At our core, we're an MGA. Our largest book of business is stock throughput, and we're the largest cover holder in London for stock throughput, around a couple $100 million right now written there. We have a vastly growing shippers interest product. We write the largest book of vessel pollution in the country. Our inland team is now 2 or 3 years old. That's been vastly expanding. In our transportation and logistics team, which basically focuses on your freight forwarders and your freight brokers. That team has been growing as well, and we're doing some amazing things in our niche space. So that's the core of Falvey and the products that we typically write. And I run the specialty brokerage. So the goal of bringing me on board now, it's about, I think it's going into my 4th year, was to provide additional capacity and appetite for around our products that we offer from an MGA perspective. We offer additional product lines as well, and we'll get into that. David, you can move forward, I think, a couple of slides at this point. Perfect. So as I mentioned, you know, our goal is to expand the appetite and capacity for our MGAs. So if it's a stock throughput risk and it doesn't fall in line with typically what we like, and we quote actually 80% of what comes in our doors. I can go to London, I go to some of our domestic markets and find a solution for you. As we mentioned, some complementary products, motor truck cargo, product recall, we feel is a great fit around our stock throughput policy and some of these other things, including trip transit. We have actually also just launched a life science division in the brokerage side of things. So product liability in the life science space. If you have any questions, we've got a tremendous asset, Katie McGehee, who has several years of broking in this business. Next slide, David. We can go one more. All right, so cargo. Now, I want to be clear. This is stock throughput is the product that we write. And we'll get into what that is, because I'm not saying you don't know what it is, but I feel as though it's a vastly underutilized product. So from an appetite perspective, we write almost everything in-house. We've got, we've got a couple $100 million in limits. I think even higher. I think we can go up to about 250, including excess. But you'll see on the specialty brokerage side, we expand that appetite, and there's certain things that we like that our MGA doesn't like. So say, for instance, this heavy retail, covering the stock at a retail establishment. That's something that we won't do. And then these bulk commodities, stock only type risks, that's typically what I end up writing on my side to help the team out. Next slide. So we'll talk about who needs cargo insurance, right? So this may seem obvious, but if you have any manufacturers, they're importing materials, they've got component parts going across from different manufacturing facilities, got unfinished and finished goods moving from factory to factory, and then out to you know, the end retailer. We obviously wholesalers, distributors, and the retailers. All these people can leverage stock throughput policy. Next slide. Remember, this is first party coverage, right? So we're covering the goods while if it's lost or damaged while it's in transit. This is anywhere in the world. So we're covering it in transit. We're covering it at a third party location or the insured's location. So anywhere around the world, any mode of transportation. So the idea is we get it soup to nuts. So as soon as that thing is a finished good, we'll cover it until it becomes someone else's responsibility. Next. So as I mentioned, it's not just for shipments by sea. It can be domestic. We'll cover it as it leaves the facility on a plane, on a train, on a boat, on a truck. We don't care. And it could stop temporarily at a warehouse and then get moved again and get moved again until it becomes someone else's responsibility. We'll cover that entire process, that entire life cycle. Next Dave. I know this PDF is a little bit different. So the beauty of stock throughput is it kind of removes it brings clarity around who's going to pay these claims, right? So you may say that you may have a manufacturer and they say, oh, the motor truck cargo carrier has their liability. Oh, the warehouse the warehouse has their liability. Well, first off, you have to prove that they're liable first, right? And then second, do they have the limits that are adequate to pay for all the loss that you have as an individual, so or as a company? So let's say you have and I do this all the time because I write warehouse legal and I write motor truck cargo, and I know for a fact that these motor truck cargo companies, these motor carriers are typically, they have limits of 100 to 250, maybe 500, right? They may have, we don't know what they have on that truck. They're going to pay, you're going to get a percentage of whatever they have available. If they have multiple clients on that truck, you're going to get a percentage. Same thing in a warehouse. I have warehouses where they have hundreds of millions of dollars of goods sitting in their warehouse. In the warehousing has about 5 million in coverage. Well, there's going to be a problem, and that's not covering CAT. Typically, warehouse legal is just liability. So a hurricane comes through, those goods are not going to be covered. So the goal is to cover it first party, make sure they get paid, and then we can go subrogate from that motor carrier, from that warehouse, whoever may be at fault. So again, as this notes, there's no dispute over the claim. You get paid right away. What we're doing very often now is we're writing a lot of stock for companies. So I have a grocery store out in Florida where I wrote all the stock and some contingent cargo for the transit, and we have full CAT limits, and the price is much better than having in their package, leveraging, showing it as BPP. So it's cheaper, it's better coverage, better limits, better deductibles, and the price is better. And so it's something where we're seeing that get pulled out. It also gives additional, obviously sometimes you're limited by capacity. That helps with the capacity play as well on the property side. Next slide, Dave. All right, so that's it with stock throughput. If there are any questions, we can answer everything at the end, or if there's something right now, David, anyone has, feel free to jump on in. But On the inland side, our MGA, they are you know, they're fairly new. We're somewhat conservative, but we do write some very cool stuff on the MGA side. So we're writing a lot of logging. They'll write the warehouse legal. They can include cat. We have limits up to 25 million. We do love contractors equipment. On the builder's risk side, they're conservative in the sense where they are not writing frame construction right now. Well, that's a problem, obviously. So I see a lot of that come to my side. We have capacity for that, an appetite for that. We do have commercial output policy, which is essentially it allows us to write property with large schedules of inland marine. So the inland marine piece, though, has to be more than 50% of the risk in order for us to include BPP or building coverage. So it tends to happen on random farms and stuff like that, that we tend to write that policy. It tends to be effective. But you may see, I don't know who's out there. I don't know where you're located, where you may see where that could be of a benefit. And then cash and transit, we have some very large accounts in that space. We love to write that stuff. Next slide. All right, on our logistics package. So it is a package. It's GL, E&O, contingent auto, contingent cargo, cargo legal. This is for your freight brokers. This is for your freight forwarders. This is the idea. It's all the liabilities that they have. And we can piece that together. We don't do monoline contingent auto, but typically we'll package everything together and write that for you. We have been able to add on larger accounts some motor truck cargo. They've added some warehouse legal to that package, to that slip. So really doing some great work on that side. I know there's been some changes in that space and some consolidation. So we're just growing that book. We actually have had it around for about 3 years now. It's starting to really get up there. We're having some great success there. Shipper's interest, very unique. I don't know if anyone is writing that, but really what it is, we plug that in with the freight brokers on their ride boards, and they can, there's an API integration, and they can choose to leverage our insurance when they book a load. So it's good for the freight forwarder, for the freight broker, because it allows them to alleviate some of their risk by having another layer of insurance below theirs. Now, I can also write shipper interest policies, excuse me, and annual shipper interest policies I can place in London. We've done some great work on that as well for very interesting type of shipments, whether it's cars or art and stuff like that. So on the logistics side, as noted, motor truck cargo, this is all broked. I have about 15 markets on the motor truck cargo side, similar on the APD side. We do love the excess on both the APD and the MTC. I love warehouse legal. I know it's on the inland side as well. I write a ton of it. I write it. Cold warehousing, love that. Anything difficult to place, I love it. We can include CAT, which is terrific. Obviously, warehouse legal is a liability policy, but if it's needed for contract, or sometimes just warehousemen don't, they want to make sure based on their contracts that they can get full coverage on these things. Sometimes they'll just add it and pay for it. And then cargo legal, contingent cargo, we do love that stuff as well. And these high value trip transits. I'm shipping, I 50 to 100 million. Actually, I had a wind turbine. I think it was about 400 million that I shipped last year. We're doing some fun stuff over here on this side. So anything shipment wise, please think of us. Next slide, Dave. Vessel pollution, I would say out of all products, this is the one I know the least of, but it's pretty simple. We're covering the pollution for vessels. We are expanding the appetite. We're expanding what this division is doing. That's going to be revealed here shortly, but we do on the specialty brokerage side, we're doing the marinas and the hull and P&I, stuff like that, marine contractors, as you see here. So we're going to start seeing more in that space at Falvey, but think of us there as well. Next slide. So I'm going to show you some CAD examples here. It's kind of fun. At the same time, you know, I want to say if you're going to think of Falvey, ocean, marine, inland marine logistics, right? That's kind of our space. That's our niche. So as I mentioned, warehouse legal, I wrote a $50 million limits. It's all pharma, 146 grand. That includes CAT. I actually just added another $50 million onto that. I wrote an excess policy, just they added more limits. So I just wrote that the other day. Stock throughput here is a great one. We actually, this is a US based company, but they had some transit in Milan and a warehouse, or they had a very unique type of apparel, one-off apparel that they were storing over there. So we're covering the transit to the warehouse and the limits there. Now they had to have a US based, they had to have US location for me to write that, but no problem otherwise. Product recall. We love this product. We think it fits perfectly well around stock throughput, because we're going to, with stock throughput at a manufacturing facility, we can cover the raw goods on site, and then we can cover, you know, kind of unfinished goods. Like it may not be the final product piece, but it's sitting there ready to go, or the finished goods, but we won't cover the stuff in process. That's where we can pick up the product recall. I think sometimes people forget product recall. With product recall, the majority of the losses that occur before it even leaves the facility. It's not just pulling stuff off the shelves, and we firmly believe that that's a great product to dovetail with our stock throughput policy. Next dip. All right, contractors equipment, recycling center. Love that little guy. Great little policy. We will write some of the difficult stuff. We love trying to write this stuff. The retail stock. So I wrote this on a stock throughput policy, right? Grocery store, 11 locations had CAT covering all of the stock in all these grocery stores. We also picked up contingent cargo. So they had, I mean, they were relying on the motor truck carrier to handle any losses in transit, but you know, they wanted just to make sure. So we wrote the contingent, wanted to make sure that they had coverage just in case. And contingent cargo is actually fairly inexpensive because it's technically, you know, because it's contingent, it's not primary. It doesn't get hit all that often, so it's fairly inexpensive. It's a very nice to have. Also want to say we had full spoilage limits. So this actually got, this particular one of these locations got hit by Helena or Helena. I don't know how we say that, but we did have $100,000 loss on this, and it was mostly from spoilage. So we picked that up. Great risk. We just renewed that again this year. And then all the physical damage. We have a large trucking company, well, fairly large, that we've been writing. And I have a bunch of different markets that will write that. This one is written with ITMA. Next slide. If there's anything else, I think we may be done. Yeah, so that's about it. Would love to talk to anybody about anything that you've seen here. If you have anything interesting that's transit based, or transit and storage based, first party, third party. We love this stuff, and we're good at it. I think we're good at it. But try us out. Love to work for you. That's about it.
Yeah, if anybody has any questions, yeah, thanks, Craig. If anybody has any questions, there is a question section. Feel free to expand that out and type them into the chat here. Unfortunately, we're going to leave the audio muted for today. If anybody has raised their hand, I apologize. We're not going to do that part, but if you certainly could put any questions in that you have, Greg is very knowledgeable, as you can tell, and he'd love to answer those questions for you. Now, for those of you who did join a little late, as a reminder, we're going to be sending out a copy of today's webinar to everybody. So if that's going to be your question, you don't have to ask that. Greg's team will get that out to you in the next couple days. Any questions about motor truck cargo, limits? Oh, Greg, commissions. what do your commission numbers look like?
Well, they vary. To be frank, it just depends on the product and the carrier that we work with.
Okay.
So, I mean, I've never lost a deal based on commission, but we're always willing to work with you on it. If you need to net it out, whatever it is, typically we can work around that.
What about
yeah, I mean, our commissions are definitely competitive. I'm not worried about it, I guess, is the net of that. Yeah.
Right.
It's not, but it's also not a set commission across all products.
what about turnaround time? Like if somebody puts a submission through, what can they expect to how quickly can they expect to receive a submission or a
It's
quote?
funny, I was actually running numbers on that just the other day. It depends on the line of business, quite frankly, and how complex it is. I can typically turn a motor truck cargo risk as long as I have everything that I need, within 24 hours at the latest. If it's a stock throughput policy or something more complex and it needs to go into London and we're gonna have to, kind of really take a look at it. And, some of these take a bit. They can, a risk in London can take a week, could take longer, but a lot of this stuff is typically, within a few days.
Yeah, and what about your appointment process? Can you expand into that a little bit?
Yeah, it's very easy. I have a team that if you reach out to me and you want to discuss the appointment, the possibility of an appointment, reach out to me, and then right afterwards, I'll just get you set up with our compliance team. It's a simple process. I've seen it get done within about 20 minutes at certain points.
Yeah, it looks like Pedro had a question here. Is there a minimum requirement for a quote? Pedro, could you expand on that a little bit more? Do you mean like minimum for Falvey, or is there minimum dollar amount? That's kind of a little ambiguous. If you could expand, that'd be great. All right. If not, Pedro, I'll have Greg's team reach out to you. Oh, there we go. A minimum on production amount from the insured.
So we don't have. I think you mean from the agent, right? But basically, we don't have any minimum requirements from a production standpoint. The goal is to obviously build a relationship and build a book. That's how Falvey has grown throughout the years. We don't have thousands and thousands of agencies that we work with. We have a solid group of people that work with us. I'm not going to say it needs it. There's no requirement though. The goal is just to work together on stuff that you have.
So there you go, everybody. Don't be afraid to get a submission in there. Do you offer workers' comp as well with longshoremen?
I don't have that. I don't currently. Great question though.
Yeah, great question, Pedro. You bet. You're welcome. All right, we're going to give it another minute here for anybody additional to ask any questions, and then we're going to wrap it up. So if anybody has any additional questions, feel free to ask now, please.
Please feel free to email me. Again, it's GLIEWALD@falveyins.com. I think David can probably throw that up there again if he wants.
There you go.
David fixed my name. Good stuff. Appreciate that.
You bet. Sorry about that, Greg. Let's see.
Now it confuses a lot of people. Don't worry about
it. Looks like we got a question from John here today. Will the stock put through policy cover product temporarily stored at an unnamed warehouse, or do they have to be scheduled?
We can get unnamed location limits. Yes.
There you go. Now, I'm also going to throw this out there. If any of you have trouble submitting through the Appulate system or need help getting started with Appulate, you can email me, dking@appulate.com, shown here, or support@appulate.com. Either one of these emails will be able to help you out, get you started with Appulate, or if it's been a long time since you've used Appulate and you want to a little refresher, feel free to email me or my support team. We're happy to get you started. That's basically the easiest way to connect with Falvey. With this, you could bring accords in, it bridges all the data. It's a big time saver. We're not going to do a demonstration on that today just to save some time for everybody. But if anybody does have any questions or concerns about that, please don't hesitate to reach out directly to me. All right, and with that, we're going to go ahead and wrap it up for today. I want to thank everybody for your time. I appreciate you guys joining. And as I mentioned before, the Falvey team will be in touch very soon with a copy of today's webinar, as well as answering any additional questions you may have. Greg, is there anything else you wanted to add today, or are you good?
Just want to thank everybody for joining and paying attention. Maybe. Hopefully it was informative, and that's really all I'm hoping to put out there. And call me with anything that's this space can be very confusing, and so feel free to reach out if it doesn't make sense. It's something we can help make sense for you.
That's great. All right, thank you everybody. Have a wonderful day. Take care. Bye-bye.